Good evening, everyone. Thank you so much for joining in. Hi, everyone. Welcome to our 2023 tax webinar. I am so overjoyed to see all these people in the chat saying hello. I am so thrilled to also be joined by my brilliant co-hosts tonight. We have the amazing and incredible Michelle Cook, who is the founder and CPA of Carter Cook CPAs. Michelle, if some of you may recognize her from earlier this summer, where she was a part of our financial empowerment webinar, and she was such a hit with our community. We wanted to bring her back, and because of her expertise. And I'm also joined by one of my GlossGenius colleagues, Caressa Cornelius, who is a member of our customer support team as an expert in our software, and who particularly is very excited about supporting our community with this next year's tax season. So Caressa, Michelle, hi, welcome. Feel free to unmute yourself. Let's get comfy. We're going to get into it.
You got it.
Hello, everyone.
Yeah, no need to be shy now. We're talking about taxes, okay? For those of you who were on the Instagram live yesterday, you heard me say this line, so please forgive me. But I've been thinking about that famous quote, there's only two things in life that are certain, death and taxes. But let's be real. We're going to stay in the positive. So in my eyes tonight, there's only two things that are certain, gloss and taxes. So I hope that brings you a little joy. What we want you to walk away with tonight is a feeling of confidence, of relief, and a feeling of being less alone, because you are not the only one out there that is a little overwhelmed or a little stressed or a little bit anxious about filing your taxes, not only as a beauty professional, but with all of the incurring changes that are happening with the IRS that are totally out of our control, but we're doing the best that we can. We're going to set you up with the tools that you need to be successful. And I'm so excited. Everybody's getting ahead of me here. I'm seeing folks from all across the country. Okay, we've got Cape Cod in the house. We got Salt Lake City. Amazing. And yes, we do have our lovely colleague from GlossGenius as well, Karen, who will be in the chat from our customer success team. So if you do have questions, pop them in there under the questions tab. And the last thing I'll say before I pass the mic is we have these fun reactions that we like to use during our webinars that give us on stage a little sense of, heck yes, I feel you, or wow, never thought of that before. I see it. I see it happening, and I love it. Okay, who's ready to navigate their taxes as a beauty professional like a boss? All right. So let's do this. Tonight's agenda is going to be a little bit of everything, but in order to keep it succinct and easy for you to walk away with the tools that you need before next tax season, we're going to touch on overcoming the elephant in the room. You'll hear about that in just a second. Getting ahead on processing your 2023 taxes, minimizing tax season stress, maximizing your returns, and a checklist that's from Michelle and her team that'll blow your mind. It will be so easy. I'm going to use it myself. And also some amazing tools that we have through the GlossGenius software for you as well. So let's talk about this elephant in the room. And before I turn it over to the audience to ask what you guys feel, I just want to level set for a second. Taxes, I feel like there's a Shakespearean quote for this. Michelle, help me out here. Taxes with a capital T is intense. And you as a beauty professional may be feeling like, I got to run my business. I'm here to be behind the chair. I'm wondering how I can get ahead. By naming what scares you and what is preventing you from tackling this head on, you will transform that elephant into the room, into an obstacle that you can tackle. So what am I talking about here? Stress, anxiety, worry, fear that you don't know what's going on, fear like that you feel alone, that you're the only person that's feeling this way. Does anyone in the chat want to type out what are some of those elephants that you have when it comes to tax season? I see some folks typing in the chat. Oof. Yes, we need this. Sales tax, not doing them right, owning write-offs, that you're going to mess it up, that you're missing stuff that you should be adding, doing it wrong and going to jail. Let's prevent that together. Fear of doing them wrong, uncertainty, not being set up correctly, having to pay fees. This is all normal, y'all. I want everyone just to take a collective breath. I saw someone saying they were cooking dinner or driving home. Let's just take a collective breath. You can do this with confidence and ease and like a boss. Who's ready? Here are the 3 things that we recommend thinking about when you're overcoming this elephant in the room. Be direct, be honest, and be thorough, whether that's with yourself, with your business partner, with your accountant. These 3 values will help you conquer whatever green monster, elephant in the room, kind of imposter syndrome that you're feeling. Things I know I hear from our community a lot. You can tackle this. Okay, that was my mama hen moment where I just needed to reassure everyone that they've got this and we're going to get through it together. Sounds good? Okay, so let's get ahead on processing our 2023 taxes. All right, Michelle, let's talk about Taxes 101. You yourself are a small business owner, and you have worked with lots of small business owners in your career. I know you said a little bit about this yesterday, but Michelle, could you give us a little bit of your background so that folks on the call can see themselves in your shoes and feel more confident knowing that with an expert like you on their side, they can set themselves up for success?
Absolutely. Yeah. So, hi, I'm Michelle Cook. When I was in high school, I went to beauty school. I graduated beauty school and just felt completely unprepared to booth rent somewhere, to build up a clientele. I just froze. And so instead of moving forward, I was like, I'm going to go to college. I'm going to go major in business, learn a little bit more about the world. And then maybe once I understand a little bit more about the business side and finances, I'll open up my own salon. While I was in college, I ended up like totally changing directions and moving over into accounting, and, you know, pursuing that and getting my CPA license and working for another CPA firm under other CPAs and learning the business. But a few years ago, I decided to go out on my own, and my very first client was a salon. And I was just like, of course it was, because like these are my people.
Because that's the way the universe works.
Yeah, totally. And so I just want you to know, as you guys are asking questions tonight, like all of the questions that you're asking, I was asking myself. Like I had no idea about anything. And so I come from a place of no judgment. There are no silly questions. I'm here for you.
We are so lucky to have you. I mean, guys, everyone loves Michelle, and this is why, because this is a safe and maybe even brave space for you to get that personal development and that growth. I think that's a really great place for us to bounce off of. So talking about where we are today, what are 1099Ks? What does the K stand for? That's my silly question. Okay. Can I just call out that elephant in the room? But then also, what does that threshold look like for this next year's tax season?
Yeah, that's a great question. Can I admit to you, I don't even know what the K stands for. And I've like never even looked into it.
Let's petition it.
But I do know what they are and what they're for. So 1099s in general are for when someone pays you money, they're letting the IRS know that they paid you that money.
Okay.
And so the 1099K specifically is for merchant processors where, we're talking about like credit card payments are going through with merchant processor. And so any kind of payment that's coming through there when it's meeting certain thresholds is going to trigger you receiving that 1099K at the end of the year.
Okay, got it. I think that that's pretty standard for anyone who's in any industry, but specifically as merchants, we really should know that. Cool. And so as of, I think, the 27th of November, because it's kind of been touch and go, Michelle, Caressa, and I have been joking that the IRS is rickrolling us. Feels like as soon as we prepare, they change the threshold. So in order to get ahead for all of our community members like you who are watching at home, we did sort of our homework. So the threshold going into 2024 tax season at this moment is $20,000 or 200 transactions in that calendar year. How you stay informed of what's on tap is that it's an evolving process. It's new rules. They're changing frequently. Best way to stay informed is irs.gov. I know that sounds crazy for me to refer a government website instead of me giving you the answers, but that's where we're getting our answers. And Michelle, Caressa, and I are feeling really confident that what we are doing at GlossGenius to prepare our professionals is we're staying, ear to the ground and staying informed as much as possible so that we can help you out. So if you don't hear it from us directly, make sure that you're staying updated with the IRS website. Now, Caressa, I know we chatted about this before, like what we've heard from customers at GlossGenius around tax season. Checking with your tax accountant to make sure what your type is. How should you process? How should you file? And avoiding that extra work. Can we talk a little bit about what some sort of patterns you've seen in the past?
Yes, absolutely. Hey, everyone. I am Caressa. So I just want to touch on the importance of verifying your information, knowing your type. Are you an individual or are you a company? So when you signed up with GlossGenius, if you signed up as an individual, you're backed by your social security number. If you signed up as a company, you are backed by your EIN, your employee identification number. So it is very important to know your type. I do see that when tax season comes around, when members do get their 1099s, they are calling and they're asking if we can change it from individual to company. And we just don't want you to have to wait on us to make those corrections. So it is very important, if you haven't verified that information yet, to definitely go ahead and do so. Stripe, our payment processor, should have sent out an email already. So everyone who is meeting the reporting requirements should have received that email. So definitely, if you have received that email, go ahead and verify your information. And also you can verify this information in the app as well. But yeah, just in your type and make sure that everything is correct.
Excellent. 2 questions I see in the chat that I just think will be valuable for us to talk about. One is, how do I know what my type is? How do I check what my type is?
So you can actually check this in the app. If you go to the app and you go to more and you go to your bank account verification section, there will be a section that it says identity verification. You can click into that. And if you see that you have like your business details listed with an EIN number, then that means that you are registered with us as a company. If you just see like your name, your address, and just your social security number, that means that you're registered with us as an individual. If you are having trouble, you can reach out as well. We can definitely, it won't be much for us to just look and see, but that's how you're able to tell.
Thank you.
On behalf of every tax accountant everywhere, I beg of you, if you are a business, please go verify and make sure that your EIN is in there and it's not going through your social security number, just so you know it does matter.
I put this line in purple here. This came from an earlier conversation we had as we were prepping for this event. I asked, well, how would people know this? And how do they understand the difference? And Michelle, you said, remember, you are your brand, but you are not your business. And so making sure that you understand the difference. I do see some questions in the chat. I just want to make sure folks are adding them to the questions tab. And if we don't get to these answers directly, our team is going to compile these. And in the recording that we're sending out after this event, you will get sort of like a breakdown of resources that will answer all of these questions. So be sure to type them in there. We will do our best to answer some live as much as possible. Sweet. So, the other question that I saw, Caressa, that I just wanted to touch on was, oh gosh, and now I've lost it. Was what is the threshold, and why do I need to pay attention to that?
Yes. So, like Danny touched on earlier, the threshold is $20,000. You would have had to have processed $20,000 this year, and have processed 200 or more transactions. So even if you have processed, let's say, 19,000 amount of payments and had 199 amount of transactions, you will not be receiving a 1099. So in this case, you can refer to the sales reports in the app that we provide. So we still have that resource there for you if you don't meet those reporting requirements.
Awesome. Thank you. That will be really helpful for those who do not qualify for that. But let's move forward. So a question that we had for our audience, and I think we've already touched on this a little bit, but what is something that you wish you would have known the first time you filed your business taxes? I'm sure we're going to get write-offs, okay? I'm seeing saving my receipts to paying earlier. That this will be my first time. I love that. That it's just going to get better. That I was going to need money in reserves, write-offs, being more organized, paying myself. Oh, what a great point. Isn't that, that's always like a great rule in budgeting, is paying yourself first. And sometimes that means paying yourself in the way of like past me taking care of future me. You know what I mean? Okay, this is awesome. I think that what we can see here is that A, you're not alone. A lot of people are asking the same questions. B, the IRS needs to do a better job at marketing these changes. And C, the little things that you may be forgetting. And I think that's what we're going to be able to give you tonight is what do you need to know walking away from tonight's webinar so that you can set yourself up for success. Whether it's tonight, like you're just going to be doing a power hour and just knocking it out, or you're going to spend time over the holidays or as you're ramping up for 2024. Getting this in early will only be a benefit for you. And Genevieve, I love that you brought up this point around having a financial advisor. That is something we really recommend, is making sure that you're working with a tax professional or an advisor that can support you through this process. Something I also want to give a heads up on is our incredible customer support and experience team at GlossGenius basically prepare as if they're an army for our incredible community who is asking questions and wanting clarification, making sure that they're getting their reports. Our team is working around the clock to make this process as easy as possible for you so that you can minimize that stress and maximize your returns. Amazing. I love the community that's happening in this chat. I see folks supporting one another as we speak. That's amazing. So, how the heck do you minimize our tax season stress? Like I've written here, personal growth is uncomfortable sometimes. And as someone mentioned in the chat a minute ago, what I wish I would have known at, the first time that I was filing taxes for my business is this is the first time. And that it'll be the first time once and once only. So getting over that initial hurdle will get better and it will get easier. But let's talk about how do we get our finances in line by the end of year, especially as we're going into this crazy season with holidays and services increasing. What are ways that we're evaluating the way we're organizing our bookkeeping? Michelle, do you have some tips in terms of keeping up with reports, keeping track of all of those transactions? And I'm speaking to those who may or may not be GlossGenius users tonight.
Yeah, absolutely. So this is something that I know sometimes we think about it in terms of like end of year prep. In terms of like really good financial hygiene, it's really in your best interest to be keeping track of your expenses on a monthly basis. And so I really recommend using something like QuickBooks Online, or I know that GlossGenius also has some expense tracking abilities. So that's another great option. What you want to do is just make sure that you have an account that's just used for business. So it's really easy for you to identify what was business transactions. Everyone always kind of asks, and I even noticed some of these questions in the chat here today, what are write-offs? All of those transactions, all of the business expenses you had, it's just another word for write-off or deduction. It's all the same. So it's like, how do I find my write-offs? Go look and see what you spent money on. That is the simple answer.
Got it. Amazing. And for those of you who have attended a GlossGenius event in the past, perhaps one of our financial events this past summer, we spoke with AJ Schneider, who is an amazing business coach and someone who thinks a lot about how we feel when we process money. Shout out to AJ. She brought up this notion of financial hygiene and financial self-care. The same way that we take care of our skin before bed or when we wake up, or the same way that we brush our teeth or make sure that we're maintaining energy throughout the day, and just like putting that care back into yourself can come in a couple different ways. I actually saw someone just write this in the chat, that the couple $100s that they spend on a tax accountant saves them time, money, tears, blood, all the sweat, all the things, and it's so worth it. So a way of advocating for yourself through financial self-care is maybe, and I don't want to presume that someone is in the position to hire a tax accountant. And if you're not, that's okay too. But what are ways that you're going to be setting that time aside so that you can get ahead, you can minimize the stress, and you can maximize your return? Those are kind of the things that we want to be thinking about. I see awesome questions happening in the chat. I just want to say I want to acknowledge all of the conversation that's happening. We're going to get to some questions in a little bit, and we'll hear from some folks. Okay. So on the topic of a checklist, I want to make sure that you guys have something to walk away with tonight. I don't know if you're going to take a screenshot of this. We are going to send a recording, and we are going to try to make a cool checklist for you that you can easily access and save it. We'll likely put something on social, but for right now, here are the items. Michelle, walk us through it.
Yeah, absolutely. I think a lot of times people just wonder, like, how do I prepare for this coming tax season? And I'm hoping that by seeing this checklist, you'll kind of notice, like, maybe it's not quite as terrible as I was thinking it would be. And so if you utilize a tax professional, or even if you're going to use a system like TurboTax, or I should actually shout out that if your income is within certain thresholds, if you use something called IRS Free File, you can Google that. There are certain programs that will allow you to file your taxes for free. So definitely keep that in mind. But this is the information that you're going to need either to present to a tax accountant or just simply to do it yourself. So first, just simple basic information: your name, your address, your social security number. For your business, we're going to need a profit and loss. And that might sound complicated. It's pretty much like, how much did you sell? And then we were talking about like keeping track of your expenses. What were your expenses? And a profit and loss is simply all of the expenses that you had just broken out into categories. Like, these were my supplies. This is what my insurance was. This is what my rent was. So instead of all the individual transactions listed out, they're all just combined into categories. So it's a little bit easier to look at. Now, the reason why I've had people ask, can't I just tell them my total expenses was X number of dollars? The IRS has you break it out into profit and loss form, because what they're doing when they receive tax returns, the millions upon millions that they receive, is you have a code that says, I'm in the beauty industry. This is the beauty industry code. They take that and they do like a comparison between all beauty professionals. And then they're going like, are these expenses reasonable? Is this like normal? And then if you fall outside of those thresholds, that's when you like might get like a second look or a letter or an audit type of situation. So when I saw people saying, I'm afraid of going to jail, I'm afraid of getting audited. If you're just operating a normal beauty business, you're going to find that like your expenses are falling in line with those normal standards. It's like when people start doing crazy stuff that it just looks like way nuts, that's when you're going to like start getting the side eye. So just know, like, if you're just operating your business in a normal way, it's just not something that you really need to be worrying about. If you use your vehicle for like a personal vehicle for business use, you can deduct the mileage. So make sure that you keep a log. So you're going to want to keep a log of where you went and what the business purpose was and how much the mileage was. If you happen to receive a W-2, maybe you own an S-Corporation, and so you're a W-2 employee of the company, or maybe even like you're married and your spouse has a W-2 that needs to go on the tax return. Make sure you've got that W-2. 1099s, we've been talking about the 1099K tonight, which is what you're going to get from your merchant processor. But there's also lots of other kinds of 1099s, interest, dividends, rents received, lots of potential sources of income. So just make sure, usually you're going to get them in the mail. Just make sure you collect them and have them on file. If you have kids, make sure that you've got their name, social security number, and any kind of dependent child care costs, because that's a tax credit. If you've made estimated tax payments, just make sure that you have proof of those. You're going to want to make sure that you have the amount that you paid and the date that you paid, and whether it went to the IRS or to the state. That's kind of a pretty common rookie mistake that I see, is payments going to like one that they put on the opposite's return. Or I've seen even like people who paid sales tax, but then they said that it was like income tax. So just recognizing the difference between income tax and sales tax and making sure that you get the correct tax on the correct form. If you're contributing to IRA retirement accounts or HSA, which is a health savings account, just make sure that you have those details. Those are tax deductions. The next one is so commonly missed. And so it actually looks like it's huge and it's like a small thing. But I just wanted to give you guys some like tangible details about the information you need. So many beauty professionals think that they don't qualify for a home office deduction. And so many beauty professionals actually do. So please make sure that you're taking advantage of that. You can take a home office deduction when you have a dedicated space within your home where you're performing work. And I know that like you might have a location where you're meeting with clients, but a lot of times that space isn't really conducive to all of the other pieces of running a business. And so it's very common to have some kind of dedicated space within your home where you're working on social media marketing or your bookkeeping or, watching educational webinars like this, things like that. So just make sure that you keep track of your home office square footage, the total home square footage, and then some, basic expenses like your mortgage, interest or rent, utilities, insurance, real estate taxes, any kind of repairs or maintenance that you've done, HOA dues, those kinds of things. Because what we do is we we take the percentage, whatever the home office is, let's say it ends up being like 10% of the home, then we'll take 10% of all of those expenses, and then you get that deduction. To me, I feel like this one is like almost like free money, because it's like I would have paid my rent no matter what. I would have paid my HOA dues no matter what, but now I happen to be able to get a deduction on my tax return. Whereas like so many other write-offs, it's like I had to go spend money that I wouldn't have spent anyways. And this is one where it's like I would have had a home anyways. So it's nice to be able to get that deduction.
Oh my God. I mean, I need this like poster board sized, printed out for everyone. Hope everybody's, you'll receive that in the mail, like the checks that they used to like give out for the lottery. Just kind of speaking live, Michelle. Everyone's obsessed with this, and I think that we can go a little bit further and talk about some of the questions that we've been seeing come in the chat live tonight, which I think are relevant to this checklist. One of the questions we keep seeing is, what percentage of income is best to save or have on reserve for tax time? That's like one of the only things I don't see on our checklist here is talking about that reserve. What should you have quarterly? Is that quarterly, or should we be thinking about it annually?
So I would say generally you're going to want to save about 25 to 30% of your profit. So profit is your sales minus all of the expenses. If you don't currently have the privilege of having access to like good bookkeeping records, what I like to tell people is consider taking 15% of your revenue, like total sales. And that is often an okay workaround if you don't have access to good bookkeeping records. It's what I typically see is that in the beauty profession, an independent beauty professional typically will have about a 50% profit margin. And so just the way that the numbers work out is a 30% of profit ends up being 15% of revenue. And so that's kind of how I backed into that number. So obviously I would suggest like getting your bookkeeping in good condition so that you can utilize it to do that percentage check. But 15% is a good guesstimate if you don't have access to that. Quarterly estimated taxes are due on April 15th, June 15th, September 15th, and January 15th. So the reason why I bring that up is because we say quarterly, and in our minds, quarterly is like, okay, every 3 months. But you'll notice the distance between April to June is only 2 months. And then the distance from September to January is 4 months. I would love for it to be equal and even. The reality is it's not, although the IRS does want the payments to be even. And it makes it a little bit uncomfortable for some business owners for that June payment because they really only have 2 months to save up for it. So that's why I bring that up. It's just something to be aware of, just to make sure you have that extra savings on hand so that you're prepared for moments like that.
Excellent answer, Michelle. And I'm seeing some great feedback in the chat as well. Can you say the dates one more time? I believe that it starts with April 15th, June.
April?
Yeah.
April, June, September, and January, all on the 15th.
Got it.
Yeah. And April ends up being a hard one if you didn't make your estimated payments last year. Because what happens is that Q1 payment becomes due on April 15th. But then you also have last year's taxes due if you didn't make your estimated payments from filing the return or whatever payment you're going to make with the extension. So I think it's just like a good reminder right here in December is if you haven't been making estimated payments, start saving, do what you can to get ahead so that when it comes April, you have a little bit of cushion ready for you.
Mm-hmm. So I'm taking a look at the questions tab. Michelle, do you have access to that? Can you see that from your
I'm
your
sure
side?
I can. Let me pop over. I see. Yes, it's loading.
Okay. Check out those questions. I have a couple of my favorites that I'm seeing that I want to make sure get answered, but then I would love for you to check those out too. Let's start with one question that I saw a couple times was around the difference between LLCs and S-Corp and what that means in terms of which one should you be filing as.
Yeah.
Hopefully I said that correctly.
Absolutely. Okay. So when you are, let's say, a sole proprietorship, that means that you're not technically a legal entity. You and your business are the same in the eyes of the IRS and the law. Once you form an LLC, that's when you've separated yourself from your business. And that's what we were talking about earlier. Like, you might be your brand, but you're not your business. Once you have that LLC, now you've got the EIN. Now there's separation, which I highly recommend. I think every business owner should make that separation. Now, once you have this LLC, you can do something called an S corporation election. So it's kind of like, creating an LLC is like getting dressed, and the S Corp's kind of like putting on the hat. Like, it's the finishing touch. So not everyone should be an S corporation. It's an individual consideration. What I would say is that typically you're going to want to consider making that election when you have about a $50,000 a year profit. So that's like revenue minus all of your expenses. And then definitely by like 60K, you pretty much should really be an S Corp. The reason why is because it saves you in taxes. But I don't recommend doing it too early because there are administrative costs with running an S corporation. There's a separate tax return you have to file. It's complex. I tell people all the time, if you're reasonably tech savvy and willing to do some research, you can probably file your own tax return when you're just a single owner LLC or a sole proprietorship. I never recommend people file their own S corporation returns. It's too complex. But because of that complexity and time that it takes, it's more expensive than a personal tax return. In addition to that, you have to set yourself up on payroll as a W-2 employee, which is really nice and actually beneficial for a lot of reasons, but it is an extra expense because now you have payroll tax returns that you need to file, generally a processor. So you're looking at about $2,000 more a year of just like administrative costs just to have the S corporation. And so you're not going to make that election too soon because you need your tax savings to be over that $2,000 to make it worth it for, your time and all the excess. So those are my general recommendations for when you want to make that S corporation election and why you might want to wait until you're a little bit more profitable.
Awesome. Another question I saw, and I see some folks supporting and like, heck yeah, I feel the same way. It comes from Joanna. I never understood the quarterly payments, and I haven't made them under my LLC. I'm worried now that my taxes outcome will be different. Let's talk about that. It's like the hardest thing, guys. This is the elephant in the room, is saving the money to make the money, to then save the money, to then make the money, and reporting it on the 15th of every quarterly month, by the way. One thing I just want to repeat, you are not alone. And I'm seeing someone in our community who's piped up that I'm really grateful. One of our incredible partners and someone we love very much, Matthew Landis. He says, saving weekly using an auto withdrawal to my American Express high yield savings account was one of the best ways I ever did for saving my taxes. Easy to set up, more difficult to access than a traditional savings account, so I wasn't tempted to dip into it. So that's a really great, I think, perspective to have. Matthew Landis is an incredible example of a beauty pro, a salon owner, an educator. If he's doing it, I suggest y'all take that tip too. Sorry, Matthew, totally putting you on blast, but he's someone who we regard in our community as well. Michelle, as far as like when it comes to that saving, what happens if you haven't done that part yet?
For sure. I'd say this is really common, especially in the first year of business, because people are so unsure about how much to save and they don't really know their numbers. They haven't got their books together. What happens is you just set up a payment plan with the IRS. If you don't have the money and you go to file, sometimes what happens is people go, I don't have the money, I'm not going to file my taxes. That's the worst thing that you can do. And that, we all know that. It's like we get anxiety, we bury our head in the sand, and then we're like, try to pretend it doesn't exist.
Mm-hmm.
There are
Elephant in the room.
Two kinds of penalties. One's a failure to pay and one's a failure to file. So we always want to file no matter what, because we just don't want to get that failure to file penalty. So we can save ourselves from that penalty just by filing the paperwork. You can file the paperwork without making the payment. So just know that that's an option to you. What can then happen is you set up a payment plan with the IRS. You have up to 5 years to pay it back. So I feel like the repayment terms are pretty generous. And I typically recommend, if you're able, pay your state, because states aren't quite as easy to work with as a general rule of thumb. But the IRS is actually very, very good to work with in terms of having to set up a payment plan. So, just take it head on. I usually recommend, if you're kind of in a bind when you're getting ready to file your taxes and you have some money saved up, I typically recommend go ahead and put that money towards your Q1 payment and make sure that you're going to be good for the future. Because once you get on the installment agreement or payment plan, the IRS will basically make you redo your payment plan if you owe any money the next year. Like, you never want to owe money again while you're on that payment plan. Mm-hmm. So just make sure that you stay current. Instead of, what I see happens to a lot of people is they'll try paying off the back taxes but not pay their current estimates, and then they get in this snowball. Just easier to like kind of put a line in the sand and say, from here forward, I'm saving, I'm good, I'm committed, and we're just going to get on a payment plan and we'll pay off the back over time.
Mm-hmm. This is what I was talking about before, y'all. It's sometimes uncomfortable to get that growth, but that discomfort will only propel you farther. An example of, hey, accept me as I am. I have a question from the audience. Is it possible to not have any profit your first year? And if there isn't any profit, what do I do with my taxes?
Fantastic question. Okay, so here's the deal. A lot of people don't have profit their first year. In that case, you don't owe taxes, which is nice. And what you can do is either carry that loss forward and apply it to future earnings, or if you happen to have income from other sources, maybe you're married, filing jointly with a spouse, maybe you had another W-2 job during the year, maybe you were like partially an employee, partially opening up a business, that loss can get applied to your other income. So I guess what I'm trying to say is you can utilize that loss against other sources of income.
Can you explain that, just that last part, using that loss for other sources of income? Can you drill into that?
Yeah, let's say, I'm just going to make up easy numbers. Let's say you had $10 of income somewhere else, but you had a $5 loss from your business. Instead of, having to pay on that $10 of income, you could say, oh, actually I have this loss over here. I'm going to apply that and like minus it out. So now I'm only going to pay on the $5 remaining dollars. So it can help you to wipe out taxes from like other sources of income.
Oh, that makes a lot more sense. Okay, so Michelle, did you pick out any questions that you wanted to answer from that question tab? I'm so grateful for everyone who's participated. This is by far the most questions we've ever had on a live webinar before. So please, thank you for your patience and bear with us as we get through. Some of them are similar to others. So let's just pick out some of the top ones we see. And everyone, just want to repeat, this will be recorded. This is being recorded, and it will be sent out to all of our attendees later this week. So just hang on to that. But additionally, Michelle is here as a resource. So if you wanted to contact her, talk about your specific business, or take this recording and learn some things and then bring it to your accountant, totally okay. So let's get into some questions.
Absolutely. Yeah, you guys have great questions. There's so many of them. There are a few that I can answer real quick and easy. People were saying, like, when should I do an LLC? My recommendation is from the beginning of your business. And let me explain why. One, there are a lot of good legal reasons. I'm not an attorney. I'm not going to go over those. From an accounting perspective, the reason why is because once you set up this LLC, then you get the EIN. And we were talking about that when we were talking about the 1099Ks, that you can either have issued under your Social Security or the EIN. The EIN is basically a Social Security number for your business. So once you have the LLC, then you can have an EIN that's separate from you. When you set up your business, you don't realize how many things are tied to this ID number. So your payment processor, like we've been talking about, when you set up a sales tax ID, if you hire employees and get payroll tax ID numbers, if you have a local business license, if you set up a bank account, all of these things are asking for your tax identification number. And so that's why I really recommend just setting up the LLC from the beginning. Because if you don't, you're going to have to set up your business twice when you go to do the LLC later. The other reason is because we talked about this S-Corporation election. Sometimes you don't know if you're going to have a $50,000 profit right at the beginning of the year. The deadline to file timely for an S-Corporation is March 15th. Well, I might not know by March 15th if I'm going to have that amount of profit. But if you've had the LLC the whole year, you can kind of wait till it gets later on in the year and do something called a late election. And as long as you get your payroll set up and everything done properly, which you can work with an accountant to do, and we do these all the time for our clients, you can wait until September, October, November to see what your profit is and know that you're really, truly going to benefit and your business is strong enough to make that election. So having the LLC in place saves you a lot of headache later and also gives you options where you can save a lot of money. I've been on the other end of it where I've brought on a new client and they made a huge profit and they had a sole proprietorship. And I was just like, oh, I can't even do a late S-Corp election for you. And you would have saved like $10,000 in taxes if you had just had the LLC set up. So, we think we're too busy for all of these little things, but they can have big dollar impacts, and it's certainly worthwhile taking care of it.
Before we answer a couple more questions, I just want to get back to our presentation really quick on a couple tools and resources that exist today that are helpful for both GlossGenius users and anyone who isn't. And if you are part of our GlossGenius community and you wanted to share this with someone outside of that, this is still awesome and viable. Caressa, I want to pass the mic to you so that you can take it away in terms of how GlossGenius can support you for setting yourself up for tax season.
Absolutely. Okay, so before we jump into this, I did want to point out something because I did see a lot of questions surrounding this. So just a note, we are only required to report card transactions to the IRS, whether fully or partially refunded. So what this means is that cash will not be included in the 1099. It will not be reported. And with that being said, what you can do is you can, again, pull the reports in the app. It will show you a breakdown of those cash transactions, as well as your refunds. So keep in mind, refunds are not going to be recorded on the 1099, but on the sales report, your refunds are going to show up there. Things like processing fees, gratuity, all of those things are reported to the IRS, but you can find the breakdown on your sales report. We do have a number of reports in the app. We have our sales report. We have our transaction details report. What that does is just break down every single transaction. We have our retail tax report, our sales tax report, we do have our expenses report. So I saw a lot of questions surrounding keeping up with expenses. You are able to manually put your expenses into the app and like set them as reoccurring if you wanted to. We also have our commission earnings report. Commissions is something that was just introduced a couple months ago, as well as separate bank accounts. I'm going to get into that in a second. But I saw a question earlier about keeping up with commissions. So you can pull this report and it will give you all the information you need on what your team members are making, how much money you are making. So definitely keep that in mind. Let's see. All right, so separate bank accounts. So separate bank accounts, if your team member has added a bank account on file, and if they have met all of the requirements, the reporting requirements, and they have separate bank accounts enabled, they will be receiving their own separate 1099. So let's say you are not on our gold plan. So this is a part of our gold plan. Let's say you are on legacy. If you are on legacy and you don't have access to separate bank accounts, then you, the business owner, will be receiving one 1099 for the entire business. In this case, what your team members can do is they can, of course, refer back to the sales report and they can present that to their tax professional to help them file their taxes. So with the 1099s, again, they meet all requirements. They will be getting their own individual 1099s as long as separate bank accounts, as long as that feature is enabled in the app. Let's see. I did want to touch on another awesome resource that I find very helpful. We have the Your Money is on the Way emails. I know everyone is familiar with them because we send them out every time we send a payout. So what my suggestion is, and this is just to help you, is to keep like a record of those emails, like put them maybe in like a designated folder. That way you're able to refer back to them if necessary. And then lastly, don't forget about our amazing dedicated support team. We're always here to help whenever we can. So yeah, if you have any more questions, we are actually, like Danny said, we're going to be answering more questions. We're going to be reaching out. So definitely let us know if you have more questions. We're happy to help.
Absolutely. And by the way, there's been hundreds of questions coming through tonight. And I just want to say, I think this is awesome because even if you walk away with, hey, these are things that I don't know, at least you know now. And this is the start of the tax season. Tax season starts right now, y'all. It's today. It's tonight. I don't care about January 15th, June 15th, April 15th, whatever. Right now, this is the start of tax season for your own preparation. What are the things that you need to find out? And whether that's working individually, researching this, or working with a GlossGenius team member on your specific reporting, or working with someone like Michelle as a tax accountant and kind of building your board of directors, right? Like think about it like this. What kind of business do you want to have? How can we support you on that? I do see tons of questions in the question box. Let's answer one more for tonight because I know we are almost at time and I just want to be respectful. Kieran did just throw the free and easy workbook that we have for navigating your 1099 taxes as a beauty pro. It is a link and a PDF available for you. We are also updating this ASAP for all of the updates that needed for 2024. So when we send our recap email with all of the awesome tools and resources that you'll get after tonight, we'll make sure to have the checklist in there. We'll make sure to have, here's where you can find tips to finding your own CPA. Those are some of the questions that I saw in here. So let's throw one more question. I see, Michelle, you've already answered this, but someone else had a question around what if you are trying to file the write-offs for having an in-home salon or home office? What if you're not on the name or the title of that building or establishment? What happens then?
Yeah. Okay. So it's not so important whether or not you personally own the property, because you might be a renter. It might be a family member that owns the home. What's important is, are you paying for the expenses? So I would submit that if you are a child living in your parents' home and they're paying for everything, then there's nothing for you to write off because you're not personally paying for anything. But if what I've seen quite commonly is maybe you live with a significant other. Maybe that significant other is not like a married spouse, but they own the home and you guys live together and you share expenses. Even though everything's in their name, if you're fairly paying your part, absolutely, that can be deducted. So it's a matter of, did the money come out of your bank account? If yes, you are entitled to a deduction. You're on mute, Danny.
I just said excellent. I mean, my brain is spinning with tons of stuff. And I did see a couple folks say, oh, now I'm overwhelmed or now I'm confused. Take a breath. Remember what we talked about in the beginning. Let's go back to our elephant. Be direct, be honest, and be thorough. Those are the three main values you can keep, and I guarantee you will have success tackling that hurdle. So don't forget, you do have the power within you to make this happen, and it is just about kind of maybe sticking your hand out of the sand just for a little bit, just enough time to prepare and to implement so that you can minimize that stress and maximize your returns. Okay. That is our show for tonight, folks. It sounds to me like we should have many more of these for our community. So we will keep you posted on the high demand for these, because there is lots to get into. And let's have a lunch and learn with the IRS. I'm going to regret that I said that on this call, but for those of you who come to our amazing events every month, you know me. We're always thinking of the next best thing. I'll just call them up tomorrow. Anyway, thank you so much to everyone for your questions, for your support, for your judgment-free zone. Michelle, Caressa, I'm so impressed with the both of you. Thank you so much for the way that you have educated me and all of us on this call. I know that at the very least, we know what not to do, which is, I think, really important, especially if you're filing for the first time or if this is your 15th time. Knowing what you can and can't do is really important. So thank you so much. We're going to keep everyone's questions. We're going to find the best way to compile all these answers so everyone feels heard and seen, because that's most important to us. Okay. Have a wonderful evening, and we will see you soon. This won't be the last you'll hear from us before the next quarterly reminder, whether that's in January or in April, okay? We'll talk to everybody soon. Thank you so much for joining. Have a lovely evening.
Bye.